Taxable accounts are so named because they are not retirement accounts and therefore do not get tax-deferred status. But taxable accounts can have more freedom and less restrictions than retirement accounts. In this video, we're going to look at the 3 most common ways to title your taxable account to achieve your goals.
Welcome to the Rhino Investor Educational Series. Like and subscribe to charge along with us.
The 3 main ways we see taxable accounts titled are individual, joint, and trust or entity, but there are some details to add to each layer. With the individual taxable account, it's just what you think and it's owned by one person only. Even some investors with partners may end up choosing an individual account for some of their assets to keep separate property or for certain estate planning purposes. If you have an individual account and you don't want it to go through the probate process, then in most cases you can add TOD, transfer on death, to the account. TOD is a way you can add a beneficiary to a taxable account. Just be careful in doing so, and you may want to consult with your licensed attorney about adding TODs because these assets will now not pass through your will. Always make sure your beneficiary assets and your probate assets are working together to accomplish your goals. If you travel extensively or would like to prepare for the unexpected event that you may not be able to handle your financial affairs, even temporarily, consider talking to a licensed attorney or your financial institution about a power of attorney or even a durable POA. This is a person you trust to handle your accounts for you when you cannot, but they do not own the account. Any POAs cease to exist upon your death, and from there, your named executor will execute your will. There are no restrictions for adding or withdrawing money to a taxable account like there are with retirement accounts. And it's typically a good idea to build up a reserve of investments that you don't have these restrictions on and that don't automatically charge you income tax every time you need to make a withdrawal. Investments in taxable accounts will get a 1099 every year, and depending on the type of investments you own, possibly more tax forms. You'll report your dividends and interest each year, as well as capital gains and losses. Taxes for taxable accounts can be more complicated than regular bank accounts, so a CPA or tax software can help. Also, a licensed financial professional can help manage and mitigate taxes with certain investments or strategies to help in this area. The joint account can be tricky, so make sure you have the one you want. The 2 most common are joint with rights of survivorship and joint tenants in common. The JTWROS is the joint account that most of us think of when we establish a joint account. It's typically owned by 2 people, but it can be owned by more than 2. Everyone on the account owns the account and can act independently. When one owner passes away, the remaining owners inherit the account in full without probate or tax consequences. The second most common joint account is joint tenants in common. In this account, both account owners own the account and can act independently, but when the first owner passes away, his or her portion will be probated to their estate and the remaining owner will only receive half of the account that is left. This may work in such cases when siblings or business partners need to have a joint account during their lifetime, for example, but they want half of their assets to be left to their family upon their passing. The last taxable account we'll talk about is a trust or entity. These are accounts that are dictated by a legal document and must be titled in the name of that trust or entity. If you've met with an estate planning attorney and established a trust, you most likely need to follow through with the most important step of funding the trust. That means you have to retitle your taxable account assets in the name of that trust. Your financial institution will most likely need a copy of the trust or a trust certificate to open the account to make sure they're following the rules outlined in your trust. The same thing applies with an entity like an LLC, for example. Making sure that your accounts are titled correctly is one of the first steps to success in investing and retirement planning. These are not the only types of taxable accounts, but knowing these most common types gets you a long way. I'm happy to help you discover the right titles for you and your family. Thank you for watching. Keep going in this series to learn more about retirement accounts and their rules. See you there.